Man, you said I just got lucky. With Palantir? Alright, listen. I'm not here to sell fear. I'm just gonna walk you through why I shorted Nvidia. No hype, no headlines, just the risks. The market doesn't want a price. First, four giants keep the money flowing. Microsoft, Meta, Amazon, Google, that's concentration. Call it what it is, one boardroom cuts the budget, everybody feels it. What? One CFO delays capex, one earnings call changes guidance. Future demand can disappear a whole lot faster than it arrived. Second, vendor financing. Money goes out just to circle right back. Startups borrow cash, buy GPUs, make demand look stronger. The shipment's real, the revenue's real. But ask yourself, would that order still exist without the financing? Sound familiar? Cisco, 1999. Sometimes you're funding your own customers. Credit expands, orders accelerate. Everything looks organic until the credit cycle turns. Then demand wasn't destroyed, it was borrowed from tomorrow. Third, accounting. Those chips don't stay cutting edge forever. Technology moves fast, accounting doesn't. Every new generation raises the bar. If customers write them down or stretch them longer than expected. Replacement demand slows. Economic life and accounting life aren't always the same thing. Paper growth meets real life. Come on, you know this game. Semiconductors have always moved in cycles. Everybody acts like this one's different. Maybe, maybe not. Data centers get built, factories expand, supply chains race to keep up. Customers order early because nobody wants to be short. Demand gets pulled forward. Future purchases show up today, then the shortage ends. Warehouses get filled. Purchase orders don't arrive the way they used to. Inventory builds, replacement slows. Not because AI failed, because customers already bought what they needed. That's not the depth of AI, that's just what cycles look like. The market usually notices late, it always feels permanent right before it doesn't. See, I don't need the most likely outcome, I look for tail risk, low probability, high impact. Power grids already under pressure. No electricity, no new clusters. Private credit helped build this boom. Keep financing, made expansion easier. If credit tightens, projects get delayed. Capex slows, then there's Taiwan. One island, one foundry, TSMC, building the world's most advanced chips. If that supply chain ever gets interrupted, the whole AI ecosystem feels it. That's not my prediction, that's tail risk, low odds, massive consequences. The market prices certainty, I price possibility. So, you still think I'm running on luck? I got nothing against Nvidia. It's one of the best companies in the world, maybe the best, but great companies can still become greatly overpriced. I'm not betting against AI. I'm not betting against innovation. I'm betting against impossible expectations. When perfection's already priced in, even great news stops being enough. That's the job. Stay rational, stay level-headed.
Hold it. I hear you. It's a solid short thesis. But every cycle has somebody calling the top. You see risk. I see why the market keeps buying. Let's talk. You say, before customers drive the business, I say, look who they are. Microsoft, Meta, Amazon, Google. They're not over-leveraged startups. They're the richest companies on earth. These aren't speculative buyers. They're building critical infrastructure. AI isn't a side project anymore. It's becoming the operating system of every business. You call it concentration, I call it committed demand. Now, vendor financing, sure. Some startups need help. That happens in every industry, but startups aren't driving Nvidia's earnings. Hyperscalers are the biggest. Checks aren't coming from venture capital, they're coming from trillion-dollar balance sheets. Cisco, wrong comparison. The internet was optional, AI isn't. Back then, companies hoped the traffic would come. Today, the users are already here. Accounting, you're right, technology moves fast. That's exactly why customers upgrade. Every generation cuts cost per token, cuts latency, cuts power. If a newer chip does twice the work using less electricity, keeping old hardware gets expensive, not replacing it. Has it cost too? semiconductor cycles. Of course, they always exist, but this isn't just another PC cycle or smartphone cycle. This is infrastructure. The last time the world rebuilt this computing platform, it took years, not quarters. Every company still needs more compute, more inference, more capacity. Training slows, inference grows, different workloads, same demand. The cycle changes, it doesn't disappear. Valuation, maybe it's expensive. Great companies rarely look cheap while they're changing. The world, Amazon looked expensive.
Whatever,
Apple
fine.
Looked expensive.
Let's see
Even
who's right.
Microsoft looked expensive for years. Perfection, no. Execution, that's what the market is paying for. Tail risk. Absolutely, power matters, credit matters, Taiwan matters. Every investment is risks. The question isn't whether risks exist. The question is, are they large enough to stop what's already happening? Cloud robotics, autonomous driving, drug discovery factories. Every industry is adding compute. Demand isn't coming from one product, it's coming from an economic shift. So, who's right? Maybe you, maybe me. Markets need both sides. You protect capital, I compound it. You look for downside, I look for the next decade. I'm not saying risk doesn't exist, I'm saying innovation usually surprises the skeptics. That's the trade. Stay curious, stay invested.
Bloomer! Remember 6 months ago? I told you, semiconductors were overheated. Take some profits, raise cash. You laughed. You said AI is just getting started. Now look, this year's gains.
Listen, you're looking at the chart. I was looking at the business. Those aren't always the same thing.
Come on, the stock dropped 40%. What else do you need? You call yourself a portfolio manager? Tell me, what exactly were you waiting for?
Well, I was waiting for the business to break. The stock broke first.
Are you trying to drive me crazy?